Hello and welcome to our market alert video for today, which is Federal Reserve Speak Day. And just to give you an update on our thinking on that and where we think things are going to go and our take, basically. So Chairman Powell of the Federal Reserve said that what we've been saying, and that is that inflation is going to be around a little longer than people might have thought. Also said that they're going to raise interest rates 0.25%, which we anticipated. He also said that they probably will only raise interest rates one more time this year. That's all they have penciled in. So that was good news to hear. He also, in his statement, said that depositors at banks in the United States are safe. And so on that news, the market was headed up very nicely because it was all good news, right? Inflation is going to come down, but it's going to be around a little longer, which is not terrible. Interest rates are not going to go up to the sky, and that he took that off the table. That was good news. Bank depositors are safe, good news. So everything was looking really nice, and the market was going up. However, Janet Yellen decided to announce that the Treasury was not going to change the federal deposit insurance for depositors. And so when she said that, it kind of tickled the nerve out there that we're going to have a huge banking crisis. And so that caused the market to sell off at the close. So in our view, what she was saying was we don't need to do that because the banking crisis is essentially we'll do it if we need to. The Federal Reserve just said they're going to print as much money as it takes to cover us all. So we don't need to make any changes. But investors reacted as kind of a knee-jerk reaction. Our view on it is that the general message today from both Treasury and Federal Reserve was things are okay. They're going to take longer to get where we want, but we're generally moving in the right direction. So we think that what happened at the close today should be a temporary situation. The question, though, is if I was you, is what if the close today was not a temporary situation? What if investors are right that we are headed into a big bad banking crisis, and we're going to see all these smaller banks have large problems, and their depositors and small businesses that do business with them are badly affected, and we have a massive down period in the stock market. Certainly, there's a possibility. We don't think that will happen, but it could. And so that's why we have our invest and protect strategy, because if things go down dramatically, we want to be able to protect our clients from major losses. And, that's why we sold in April of last year to protect against what we saw coming. And sure enough, the market went down from April until it bottomed in October. So if you don't have a protection plan in your retirement plan, I would strongly suggest that you visit with one of our retirement planners, get a second opinion, see if maybe you agree with our philosophy that growth is important, but protection of principal is even more important, and that we want your money to last as long as you do. So I thank you for watching this video. I hope we get to meet each other at some point, but certainly I'd like for you to visit with one of our retirement planners and build out a retirement plan that incorporates protection of principal. So again, thanks for watching this video. Share it with your friends and your family, and we'll talk soon.